Hello to all. Today I have again the honor and privilege of having a conversation, financing conversation with Sebastian Rivera, Senior Loan Officer at Intercoastal Mortgage. So without further ado, Sebastian, good afternoon. How are you?
I'm great, Adrian. Thanks for having me again.
So let's dive in. Let's just talk with the most basic question. Where are mortgage rates today?
Luckily, coming down since we last spoke. Yay.
So there
We
you go.
have seen, as you know, inflation is the arch enemy of interest rates. The Fed is doing everything possible to curtail the inflation, to try to keep it under control. Slowly but surely, we are seeing a path laid forward where we will start seeing lower inflation ahead. That has helped mortgage bonds, 30-year fixed mortgage bonds specifically, start to trickle down. So at one point, we had hit the sixes. Now we're in the very low fives. Last week, we were in the high fours, which was fantastic. So yeah, let's hope we can just continue this trend.
Okay, so do you think that part of that lowering trend of the rates has to do with a recession? As you know, historically, whenever there's been a recession, rates have had a tendency to be lower. Do you think that's the case?
I do think it's the case. We are not, depends on how you define recession. We have contracting GDP 2 quarters in a row, that's evident, but we had incredible job gains, 540,000 jobs. So when you combine the two, that said, we're not really in a recession, but at the same time, we kind of are. So I do think that we have enough factors which point toward a recession, which are helping bring mortgage rates down as fears of recession continue to mount up. If we had a low jobs report, this would be full recession.
Yeah, this is like a unique times. And I agree because of those two factors, lagging stats that would take us into a recession as two GDP quarters, in addition to the fact that, if you add that to that, the jobs growth, it's very unique in that respect. So anyway, let's just keep our fingers crossed that rates will be lower. Can you give me an idea of what your trend is going to be? What are you seeing from here to the end of the year?
Downward trends. That's the $1 million question. I get it asked all the time. Where will rates be tomorrow? Where will they be next week? We see the trend. The trend is downward. There's going to be ample volatility in between. So next week we may be higher. Last week we were lower. This week we're higher. Next week we're probably going to be a little bit lower again. So general trend downward. I think as we progress toward the end of next year, maybe even beginning of 2024, we're going to see a nice refi wave. So I do think that's coming up ahead sometime in the next 12 to 18 months, really. So yeah, general trend downward, ample volatility in between. Don't hold your breath.
So what are your suggestions for somebody that's looking into buying? As you know, you have buyers out there, and in some markets, not all of them, but in some markets, inventory is low. So they jump on one property and maybe they lose that one, and then they jump on another one and maybe they lose that one. So, we're talking of a span of time here for people to go from the moment they decide that they want to buy and they get a pre-qual letter from you to the moment they find that perfect property. Any suggestions for them?
That's number one, patience. It's not like going to a grocery store and picking up your box of cereal and going to check out. It's a process of elimination, buying real estate typically, unless you build your own home. I mean, it's just being patient with the market. I would say 5 months ago, it was much harder to buy a house than it is today. Now you have more options. Now there's additional inventory. You don't have as many buyers. You don't have 19 offers going behind yours. You have 2 or 3. So it's a better time to buy a house. And I would just say be patient, negotiate, lean in on your realtor, trust what your realtor says. They're giving you the information for a reason.
Is there a reason to have like a rate lock?
Absolutely. If you can lock the rate beforehand, fantastic. The only caveat with that is that interest rate locks are property specific and depends how long out. For example, if one of my clients is doing a construction loan right now, We know the house is going to be ready in 6 months. I already know rates, just the general trend is going downward. So it doesn't make much sense to lock in right now versus where rates are going to be in 6 months. But if somebody is going to be closing in the next 20 days, 20 days is a short period of time. The safe bet is typically to lock in ahead just to cover any gains. And if rates drop, there's always a one-time free float down. But if rates go up, at least you're covered.
Perfect. So can we talk about other products? You know, there's been a trend over the last few years, if not a decade or so, to go with a 30-year fixed. And people ignored all these other strategies that are available when going to you for a loan, like a 10-year ARM. Can you talk about, you know, is there a trend now for those options, and what are some of those options?
Oh, there's an evident trend for sure. So the reason that people didn't choose ARM, well, they choose them back in 2005, 2006, because it was very cheap to get into. You had a 4% rate, while 30-year fixed were 7% back then. Just a few years ago, the 30 years were cheaper than the ARMs. Didn't make any sense to get an ARM. Nowadays, though, you can see an evident trend. A lot of our buyers, especially the well-qualified buyers with 20% down, I would say 7 out of 10 times are choosing to go with ARM products just because we can get them such a lower interest rate. So the 10-year ARMs are a full percent lower than the 30-year fixes. So it gives you the security of 10 years. So the way they differ, they're both 30-year loan products. The only difference is that the 30-year is fixed for 30 years, and the 10-year ARM is fixed for 10 years, and the other 20 are variable. So during the first 10 years, you can take advantage of a lower rate. You can refinance at any time. There's no penalties. If you sell the property before 10 years, be perfect.
Yeah, I think that I like the 10-year ARM because if you look at the trends, most people that say that they're buying their forever home end up being in their home an average of 9 years. So a 10-year ARM sense sounds like a perfect deal to me. Can you tell me a little bit, what is your opinion about renting versus buying? I thought I'd get you there.
There are a couple of famous economists, like I was mentioning. There's one that was saying that you should never buy, you should only rent, and invest all your money. I'm a big believer in at least purchasing the house that you live in, having the security of having your piece of land, of having your house. Homes have appreciated tremendously. If you bought a house 2 years ago, let's just say Woodbridge, that's an easy one. You bought a house 2 years ago for $300,000. That same house today is worth $480,000. You made $180,000 in appreciation for 24 months. That's an amazing rate of return. Now, not everything appreciated at those levels, but anybody who bought a house at the beginning of 2020 in this area made about 100,000 plus in equity, if not more. Some of my buyers that purchased in McLean made 500,000 in equity in 2 years. That's unbelievable. Those rates of appreciation are absolutely fantastic. I'm a firm believer in buying real estate. Buying smart, not any piece of real estate. Always good location, buy a good property, and you'll always be okay.
Yeah, I agree with you. I don't think Warren Buffett has made a mistake. You know, he's somebody that I follow. So I think that investing in real estate, if you look at the last 30 years, it's like putting your money away and it will grow. You know, as long as you don't touch it, etc., it is definitely a better investment. Also, I think nowadays, and you might agree or disagree with me, rents are expensive because as the prices of real estate tended to go up, so have those people that invested in real estate and that made rents expensive. So I definitely believe it's a question of doing the numbers, and maybe you agree with me, sometimes it's much more affordable to invest in a mortgage and buy the property that you want.
I 100% agree. And I've seen, even from personal experience, bidding wars on my rentals, putting something up for rent and all of a sudden get 7 applications. And I'm scratching my head saying, this is a rental. What's going on here?
Yeah, but prices are crazy. So I also wanted to see, do you have any insight as to, because you're a mortgage lender, you're totally associated with the real estate market. What do you see as trends in the greater metropolitan area for the next 12 months in real estate? What do you think that is?
Some people have spoken to me about a crash, and I get a lot of questions on that. Hey, will it crash? Will it crash? Will I wait? It's not going to crash. That's my 2 cents on it. I think what we saw or we got rid of were the ridiculousness. We got rid of the house that was worth $1 million that they were listing for 1.4. Those ridiculous prices with no contingencies whatsoever, have to close in 7 days. We're not seeing them as much. I still see 1 or 2 here and there, but now I see listings stay on the market a little bit longer. I don't see the ludicrous prices. I think that what happened over the past 2 years, we saw the appreciation that we should have seen in 3 or 4 years, and we're going to have minimal to no appreciation maybe for the next 12 months. Some pocket areas, of course, will always go up, but I think we're just going to have a flat market for 12 months easy.
I think that my take is, yes, inventory is going up in certain areas, sometimes not where I want it to be, which is because I have buyers for those areas, but inventory is going up. The market is not as crazy. I just say it's plateaued, and I have a lot of clients questioning the fact that certain properties, when you look at the MLS, the prices come down. And my take is not that prices are coming down, is that sellers that overprice their properties that are sitting on the market and that are being affected by days on market ask their realtors or negotiate with the realtors a price decrease. But that's not telling you that overall in the marketplace, the prices are coming down. I don't think in the greater metropolitan area, that is what is happening. So anyway, any other ideas that you have for like 2023?
I think just general trend downward in rates. I do think we're going to see a little refi wave toward the end of the year. I think that people that want to buy too many points right now, I typically talk my clients out of it. Stop buying 2 points. Stop going with what the internet lender said of buying 3 points. You're throwing money away. There will be an opportunity coming up to refinance to a better interest rate.
Okay, very well, Sebastian. Well, I so appreciate you being with me again today, and I'll see you on the next one. And thank you very much.
Thank you for having me. Take care.
You too.